still have an open order, right? No, it's okay. I'm gonna say that our theme of dollar weakness continues today, and we look to down. Alright, do I say that we have a signal? Blah 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 blah. I'm not gonna mention the counter position. Okay, and then equities. I'm just gonna say on equities we have a trade on Volkswagen. After yesterday's big sell-off, we have a signal to buy. Alright. And for the crude, as the consolidation continues, we look to sell. Okay, I'm gonna mention both scenarios. Okay. Yeah. Cool. Thank you, that's all for me. In the beginning, look. Good morning, welcome to Saxo Bank Market Call. Today is 20. Yes. Okay. Yeah. Pretty light overnight news bullet. I'm also gonna. Yeah. Did I think with this guy? Oh. No, I haven't seen this one. You can do it. Yep.
Market call or morning call? Market call. Good morning. Welcome to Saxo Bank's Market Call, and today is 24th of October. We had a pretty light overnight activity bullets. Just to mention the main ones. From Poland, we had retail sales coming out slightly below expected at minus 1.8 for the month-over-month and 14.2 year-over-year. From Eurozone, we had industrial new orders coming out slightly again below expected with 0.3 month-over-month and 5.1 year-over-year. Canadian retail sales came pretty much along expected lines, slightly better at 0.7 month-over-month versus 0.5 expected. However, there was a revision of prior figures and it was revised down to minus 0.9%. Over at the market developments, we had cable really returning, showing very bullish signals as we had dollar weakness re-entering the market. However, overnight the dollar was marginally bit. On the fixed income side, bonds were on retreat on inflation concerns, and treasuries were well bid ahead of today's new home sales. JGBs were positive, and we have a major resistance at 136.22 on December contract. Equities, we had a major reversal on Monday after solid earnings. Asia was, however, not following through quite as strong, with Nikkei marginally lower. On the commodity side, we had precious metals looking pretty solid on weaker oil. However, the crude was selling off on speculation that the stockpiles were going to be looking better, and the OPEC boosting its production levels already. What's going on? With upbeat results from big American corporations such as Apple and American Express, risk appetite seems to be returning to the marketplace. In fact, the U.S. stocks registered highest gains in 2-week period, with Apple climbing as much as, don't remember the exact percentage, but the highest gains since January. However, we saw yen rising against 16 most traded currencies, and this was primarily due to an article published on New York Times that reported that Merrill Lynch would probably write down additional $2.5 billion on top of its earlier reported $5 billion write-downs from credit subprime-related losses. And this was obviously limiting the carry trade formation and putting a cap on new, fresh carry trade loans. There is a major support line for Merrill Lynch at 64.60, so that's worth looking as we see the results of Q3 earnings for Merrill Lynch later today. UST notes, as mentioned, they rose for the second day as traders were betting on further Fed cuts ahead of today's existing home sales. Two-year notes, especially worth noticing, they are very near the lows of 2005, or at about 3.78%. Again, as mentioned, the crude prices were selling off. We saw them dip below $85 a barrel, with the December delivery contract seeing a low of 84.68 on Tuesday morning's trading, and this was again on higher than expected figures, higher than expected OPEC production levels, and U.S. oil and gasoline stockpiles expected to show growth. On calendar coming up today, again not a very heavy data day. We have at 8 GMT, we have the ECB Eurozone current account figures coming out, expected to show $2 billion for the month of August. Later in the afternoon, however, the big item is the existing home sales for the month of September, with a consensus figure of 5.25 million. All right, and we also have some crude oil inventory figures coming out at 2:30 GMT, and later in the evening we have the New Zealand official cash rate expected to show no change at 8.25%. Upcoming calendar highlights, we have on 25th of October the German IFO indices, and more importantly, Friday late in the afternoon we have U.S. durable good orders as well as new home sales and jobless claims. So those are worth keeping an eye on. For the FX trading today, we are basically continuing our dollar weakness theme from yesterday. We have a signal to buy euro dollar at 1.42616. So we have placed an order to buy at the break of 1.4262 bit, and will add above 142.80 bit. We are targeting basically new highs, and we have a stop at 1.4246. On the equity side, for the Volkswagen, we have a trade on Volkswagen. We saw a pretty sharp sell-off yesterday. However, the bullish trend is largely intact, and we have a pretty nice setup of risk-reward on this particular trade. So we are buying around 168.50, keeping a stop below 164, and targeting initially 185. And on the future side, we have two alternative scenarios. They are both basically favoring shorting a crude. As you can see from our slides, there is a major support line coming in at 81.75. Our particular scenarios are to sell crude at 85.70. This is for the December contract, with a stop about 86.10. Or alternatively, selling at the break of or below 84.65 with a target of 83 to 81.75. And for this particular trade, the stop will be about 85.40. Thank you. That is all for today.